Hi, it's Shay Mesifan again here, and welcome to the first bonus that I am including here along with the binary option smart box system. In this video, I am going to mention the three types of markets and how to identify them, and I will show you the techniques that you're going to need in order to trigger and identify those types of markets. And also, I'm going to explain the best techniques that where every market needs to be traded with, and I will also mention the strategies that works and that doesn't work which with each type of market. And why I want to give this free course here is that I know that most of you will be newbies here, and the most important thing when it comes to trading online or even trading in real business is to know what type of market are you going to enter into, to trade to into. And from my experience, I find that these three types of markets are the best thing that you want to learn before even trying to implement other people's strategies, systems, ideas, trading style, anything. And here I'm not going to tell you that my binary option smart box system is going to make you rich overnight or something like this, and you already seen this in the welcome video. But knowledge and experience plays a major part, and also education, they play major parts when it comes to trading. Even if you have a 100% winning rate system, you will need to apply some of your education and some of your experience into that trading. um, so let's just start with the first type of market that I want to talk about. Here we start with the first type of market, which is the consolidating or the ranging market, or basically the non-trending market. This type of market is well known to be during the Asian session, and you know that the Asian session is when the Australian or and the Japanese sessions or markets are open. And if you already watched the best time, the module about the best trading sessions for the binary option smart box system, you will find more information about those sessions and their time in GMT and EST time zones. Here, the consolidating market is something that is very basic here. It doesn't need you to be a genius or even an intelligent person to know and identify this type of market. So basically, the consolidating market, or what I like to call it, is the cycling market, because it's something like cycling. It starts from a point, goes to another point, and then starts from that point and go to the next point. It's something like this. So basically, what ranging market is when the prices starts from an X point here, and it goes to a point where the prices just gets exhausted, or the buyers here gets exhausted and they move their positions here. So the sellers comes out, so the selling positions will take control of the markets again, of the prices again, and take that pair, that instrument into the downside again. And then when the sellers lose control over the prices movements, they also the buyers come again and take the prices higher. And what's this consolidated market is when it comes like this, going up, comes to a point, goes down, and this turning point or reversal point is closer to the first to that point here. And same happens again, the prices goes again to the upside, and then it almost reaches this point here where the price is reversed. And the buyers become afraid of the price reversal, and they will be losing their profits. So most of them, they will close their positions and take the profits they got. So when the buyers start to close their positions, the selling here, the demand here decreases. Okay, it decreases, so the prices will go down. The sellers will take control of the price again, and they will be trending and riding the market to the downside. And this is what happens. it becomes doing that way, going up and down, up and down, up and down, so on and so forth. And when it does this, it creates those returning points or reversal points here. Those that are to the upside, we call them tops, as it's shown here, multiple tops. Or there are two types of chart patterns that I will be explaining more in the next video, which is the best 5 chart patterns that profit in binary options. So there are two types, which is the double top and the triple tops. So those are the two types of chart patterns, and those returning or reversal points that happens to the downside of a traded instrument are called the bottoms. And they are also the same. There are two chart patterns of these, which are the double bottoms and the triple bottoms. Now, as I said, this happens because this type of market is well known to be at the Asian market, during the Asian market, when the Japanese and the Australian market and the New Zealand market is open. And because the most big markets in the world, which are the European markets and the American markets, are closed, there isn't much volume, there isn't much volatility being traded during that Asian session. So the Asian session is according to those two big markets in the world, these two economies in the world. They are not that much stronger as them. So there isn't much volume, there isn't much traders and investors who would be, and market makers as well, who would be trading those instruments during that session. But sometimes some particular instruments, just like the forex pairs that have one of the currencies that are being open during the Asian session, which like the Japanese yen and the New Zealand dollar and the Australian dollar. So those pairs, those currencies that's being traded in other pairs like the NZD/USD or the Aussie dollar, US dollar, they may be trending during the Asian session because there are high impact news during the Asian markets, just like the interest rate decision, jobless claims, the monetary policy and stuff like that. So, and you know that high impact news have a reaction, whether to go to the upside or to the downside sometimes, but it's rare to find that on high impact news will lead the market to go consolidated. So whether it goes to an uptrending market or going down, downtrending market. So the techniques that I like to trade here, that I like to use here during the Asian session, which, and you know that I don't like to trade Asian session, but when I don't have free time trading the other sessions, I will have to trade during the Asian session, and it's rare to find me trading the Asian session because I don't like it. I like to trade during the overlap, both session overlap, the London and New York session. So here the techniques that I like to use are the double tops and double bottoms, support and the resistance lines, and also I like to use the psychology. This psychology will become difficult for you, so I'm not going to mention about this here. But when you use the binary option smart box system here during the Asian markets, you will be having more chances to not martingale or double up your investments on the next trade when the trade loses, because most of the time these markets the pairs will be moving in the cycling mode. And when you get an arrow, something like here with the binary option smart box system, you will be winning on the next trade. But if you don't win, you don't have another chance to recover back the loss of this trade and double up your investments on on the next trade. So here the strategy that I like to use with the Asian session is there is no martingale. I take one-time investment on each trade, and I take my profits and I wait for another cycle to happen, and I wait for the arrow to come and the other rules to match and one of the theories, and then I take my trade. And the best thing that works here is the arrow along with the breakout theory, because there isn't trend continuation, it's just a reversal. So the best thing to trade during the Asian market is to use the double tops, the double bottoms, the triple tops, triple bottoms, and support and the resistance lines, along with the binary options smart box system. And the money management strategy here that I like to use is take one-time investment and wait for a cycle to come and wait for the price to touch a resistance or a support line, and then I wait for the arrow to pop up, and once it pops up I like to take the trade along with the breakout theory and not the trend continuation theory, because breakout theory is the best solution here for trading the cycle in market. And I execute my trade, but if I lose that trade, there is no martingale methodology here. So I don't martingale, I don't wait for another another arrow to come on the same direction and take my trade and double my investment. I don't do this. I just take one time investment and execute my trade. If I lose, I move and I wait for another perfect setup to take. So that was all about the consolidating or the ranging market. If you don't understand, don't worry. I will be holding live training sessions and I will be answering all of your questions, and I will take time to all of you become good at this point and know how to trigger and identify a cycle in market. So when you find that the price going up and down, so on and so forth, so you know that this is a consolidating or ranging market, and the best techniques to use here is to try to trigger the double tops, double bottoms, triple tops, triple bottoms, and support and the resistance lines, and wait for an arrow to pop up and go along with the breakout theory and execute your trades. So this is all about the consolidating and the ranging market, and I will just dive in to explaining the other two types of the market, so just bear with me here. So this is the other two types of market, which is the downtrend trending market and the upside trending market. Here, just to in sake of being clear here, and I did not want to use a live chart or something like this. I want to get you things clear here. So how to identify, we start with how to identify a downtrend trending market is when the price moves into a downtrend here, down direction for a while, and then we get a reversal for a short period of time, or taking like 38, like in here is almost 38% of this trend here, length of this trend's length here, it took that reversal, that's price correction, and I wait for another reversal here and wait for another downtrend here to be formed. When I know that this downtrend has formed here and exceeded, what I mean by exceeded is break that low point that it has made here, that the price is candlestick closed with full body closed below that reversal point here, I know that we are in a downtrend here. So I will be focusing on taking trades in the downside direction. And when this happens, when we have this pattern like going downtrend, a reversal, a correction, and then downtrend and break that low it has made here, that point, reversal point here, I know that I am in a downtrend. And what we call this point, reversal point here, is the lower high. this call in a downtrend trending markets or upside trending markets, we call this highs and lows. Okay, and when I have in a downtrend, when I have this point, when I have this point, I call it a lower high. So why I call it a lower high is because it has formed below, lower than the previous high here, so we call it lower than that, so we call it lower high. Like I said, when this pattern has formed, going down, reversal, correction, then down and break that low here, and now I see that it's moving in the upside and making a new low point. Because this low is higher than that low, we call this lower low. So if you notice, this low here, it has made this point, reversal point, is lower than that, so we call it lower low, so on and so forth. So this is how it works. Again, prices moved up and then made another reversal. It has beginning to go down, and when I compare this to this low, to this turning point here, I find that this high is lower than that high, so I call it a lower high, so on and so forth. Like this one, it has closed, it has formed below this low here, so we call this is a new lower low, and this is a downtrend trending market. Now, how I confirm, we just go into identifying an uptrend trending market. So when price, if you see here, we have this trend going up, and I see that it has formed a new high here, and this high, when I compare it to this one, I find that it's higher than that. So this is a new higher high. We call this high a new higher high, and when this happens, I know that the trend is changing its direction from bearish to bullish. And what we mean by bearish is downtrend, and what we mean by bullish is we mean that this is a upside trend. Okay. So I have this here. I have a new higher high. So I try now. I focus on that this instrument is going up. So there's low chances for the trend to go down. So prices were reverses again, and I want to confirm. This is the confirmation for trend change. When I see this turning point has made here, and when I compare it to this turning point or reversal point here, I find that this low is higher than that. So trend has changed, and now we're in a bullish trend. So we call this low higher, a high low, just because it's higher than that it has made here. So it's a higher low. Same happens here, another uptrend, and returning a reversal point here, and price reversed. So we compare this reversal point here to the most recent and the previous high it has made here, and if you notice here, it's also higher than that, so we call this higher high. So here we are extremely focusing on an uptrend. This is a bullish trend. We are no more selling, so on and so forth. Here again, this low is higher than that low, so this is higher low. Same happens, another uptrend, and this uptrend and this reversal point is higher than the previous returning reversal point, so we call this a new higher high, so on and so forth. So those are downtrend markets and uptrend markets. So downtrend market is identified when the price makes lower highs and lower lows, lower high and lower lows, lower high and lower low. So this is a downtrend market, but an uptrend market is when the price makes higher lows and higher highs, higher lows and higher highs. So those are what confirms that this is a uptrend market. Now, how do we trigger and confirm the market change? The market change is confirmed when this higher high has closed higher than that downtrend high, lower high, and we call this a new higher high. So here we know that the market is heading over an uptrend. So the selling positions will be low here, and the most probable trend that we wanna ride is the uptrend, the bullish trend. If we are not extremely sure if the price is going bullish, we don't take any position here, we don't react to anything, we just want to confirm. We want to see if this trend is going to if this point is going to be fakey and fake us here, and I want to see where does this trend is going to over. Is it heading lower than this low, or is it going to form a reversal point here and go higher than that low? So when this higher low happens here, I am now medium. I am now not 50%, but almost like 60-70% sure that the price is bullish. When we are 100% sure that the price is bullish, the new trend is bullish, is when this trend goes above or break that higher high here with the full candlestick body. Then I know that the price is bullish, and here I start taking my positions for buying. This is for Forex basically, so you want to know these basic things before you proceed, even if you are not interested in Forex and you want to trade binary options. Now those were the techniques or basic things you want to know on identifying a trend, a downtrend and an uptrend. Now the techniques to trade the downtrend is along with the binary options smart box system and using the breakout theory. When you have a trend going down, with the downtrend theory is we usually have an arrow here, something like, it's not at the reversal candlestick but on the next candlestick most of the time. Sometimes it comes on the reversal candlestick here. So when the price is here, when the arrow pops up here, I want to make sure that the breakout theory is valid. And how the breakout theory is when where the arrow the candle that the arrow popped up on is if the bar of that candle is lower than the previous bar. So this is valid by breakout theory, and I want to take the trade on the next candle that precedes, that comes after the candle that the arrow popped up on. So this is for trading downtrend. We take a buy position here. Why it's valid to take a buy position here or a call position here? Because when there is a trend, most of the time, this is how the market psychology happens. When you have a strict downtrend, even if there isn't a strict downtrend, we have this one downtrend, and then always and most of the time we will have a correction. This is how the market is all about. When we have selling positions and profitable traders, all the traders cannot be profitable. There must be a percentage of those people, a number of those sellers who want to make money. If they don't lose, no one will make money. So not all the country is for us, okay? So we have the correction just to take some maybe late sellers that take positions here, and then when the price they keep praying that the price will go down and they will be making profits, and because they are eager to make more profits, so they want to say we will give it more chance, for price to go down and get more profits, but the market makers and the market psychology is to have a correction and hit their stop losses or something like this, or when they get when the trend goes against their entry points and they start losing, they get faked out and they close their positions with the loss. So this is I hope that I am successful here at explaining things, because I'm not really a good teacher, but I do my best here to explain everything. As I said, the correction will come. Most of the time it comes at, this is another lesson that I will be include as a bonus here, the Fibonacci trading secrets. When we take Fibonacci tool here, we take it from this point to this point, and we want to see what's the level that the correction took place on. Sometimes it's maybe 23%, sometimes 38%, sometimes 50%, sometimes 61%, sometimes 78%, sometimes 88%, sometimes 100%. Like the 100 will come at this point. So the most I think I will leave that to the Fibonacci course here. So when most of the time when this happens, when the correction happens, it goes to one of the levels that I have mentioned and makes a reversal pattern on the candlesticks, and then the prices goes down again and keep going in the same direction, which is the downtrend. And when this happens again, the binary option smart box system will give us another chance to ride that trend again. So this is a very profitable system here, so make sure that you always follow the rules. As I said, the BIO smart box system will give us a chance to ride that trend here again and give us another arrow here on the second candle after the reversal happens, or maybe sometimes this the first or the second, sometimes it depends. It always makes sure that it gives us the alert and the trade in the first in the beginnings of a trend formation. So we always make sure that we're riding the trends from the beginning, not late. Okay, and along with the breakout theory, with the volume indicator down the page here on your MetaTrader 4, it's 90% of the time it will show you that this is a valid trend breakout theory, and you will take your trade, execute your trade here, and you will be profitable taking the trade, unless there is market manipulation and you won't win the trade, or if you are late taking your position and take a bad strike rate or entry point, so you will lose. And by following the rules of using the system, you will be successful if you just follow them strictly. Again, this happens here when this downtrend gets exhausted and sellers take their profit and run out. Buyers takes control of the market again, and the reversal point happens here. So when the reversal point happens here, the binary option smart box system will give us another chance to ride the trend again, right? So it will give us an arrow here, and as I said, 90% of the time the breakout theory will be valid here on that arrow, and when we take the trade we will be winning. And we always take our trades at the very beginning of a trend formation, so we are not always late. The arrow won't give you a late position to take. And same happens, so on and so forth. It happens all over the time when we are in a downtrend trending market. So this happens here when you follow the rules. Sometimes the market, when the market becomes crazy, it may give you an arrow, but this is why I have created the filter, the breakout theory, to filter the fakey setups. It may give you a buying arrow here in the middle, or sometimes it may give you a selling arrow here in the middle. But when you use the the breakout theory to filter that setup, you will be 95% of the time you will be safe from taking that fake setup just when you use the breakout theory along with the system. So with the filter, the breakout theory filter, you won't take those fake setups, and you will save yourself a lot of time and a lot of money. The other thing that I want to explain here, something like the technique that I use. The technique that I use here is something like, I don't know how to say this. Sometimes it may give you, the arrow may give you some signals right here, like taking buying positions. Maybe it will give you an arrow here, and the breakout theory will be valid, and you take the trade. But you lose. The trend just continue going down, and this happens most of the time when there are high impact news, or even medium impact news, or even low impact news. But when the market becomes trending, there is also a strategy here, a money management strategy that I use to recover back all the losses that occurs when this happens. So for the sake of explaining everything, I will proceed to a chart, a real-time chart, so to explain that. Okay, so this is a real-time chart here on my MT4, and here when we use the breakout theory along with the system, if you notice, this is an extremely uptrend here. The arrow comes many times, like 5 times here, and the arrow, and when we check the breakout theory, it will be a real and a valid breakout theory along with the system. So we take the trade on the next candle, we lose. The second signal, valid breakout theory, we lose in the next candle. Same happens, we lose on the next candle, we lose. And again, this is valid trade, we lose. This is a valid trade, and we lose. This is another valid trade, and we win. So this is my strategy when I use when I trade during trending markets. So when you are trading on a consolidated market, you will be, most of the time, 90% of the time, you will be winning with your strategies. But on a trending market, you will be losing some trades. But at the end, when you use my money management strategy, you will be winning at the end. Here, if you notice, we just lost all of these trades here. So like six trades. So for example, I start with $5 here, and I lose. This is my money management strategy. Sorry. On the next candle, I double up my investment from 5 to 10. So I recover back the loss, and maybe $2 or $3 profit again. So the most important thing is not to lose my capital. Okay. The next trade as well, I double up to $15. Sorry, not. I lost here $10. So in total, I have lost $15. So I double up my investments from 15 to 30 to $30. So I lose again from $45 to $90. I lose again. So on and so forth. I take these trades, Martingale methodology. And at the end, when I lose all of these money here, I take the trade on the next one with bigger investments until the end, and a big win here. This is a 5-minute chart, to be honest. This is not 1-minute chart, but just for the sake of showing you this. And same applies for a selling position in a downtrend. Let me just try to find one. So let's just pause the video here, and then we'll come back when I find an example. So here is a real example here. This is downtrend here. We are downtrending, and we get an arrow. This is valid trend breakout theory, and I lose that trade. So I lost the $5 here. On the next arrow, I will wait when I usually lose that, and I see that the market is trending. I know that there will come a point where I will recover back all my losses. So I wait for another arrow. I will get another arrow, and this is valid breakout theory. And here I find that this is a losing trade on the next candle. So I will double up my investments every time. And here finally this hasn't took a lot here. So finally I got another arrow and the valid breakout theory. This is valid trade to be taken. On the next candle I win and recover back all of the losses I made here in these two trades. But let's just pretend that this trade was a loser. I will get another arrow here, a valid breakout theory, and on the next candle I win and I recover back all the 3 losses here. So this is basically how it works on a consolidating market. The price, the trade, whether the trades win when the signal comes at a, let me just explain that here. This is almost a ranging market here. It's ranging, somehow ranging. So double tops, double bottoms. Here I get an arrow, right? And I win the trade, breakout theory, and I win the trade. This hasn't touched this area, so here the price touches this same area here when the price is ranging, and this is a resistance level. So I get another arrow and the breakout theory. I take on the next trade just because this is a ranging market, so I win the trade. This is how I trade the trending the ranging market. I look if there is a resistance, if there is a double top, a double bottom, if there is a support line, and I wait for an arrow, and if there is a trend breakout theory, I will take the trade, and I will win. But when it doesn't win, I just leave it. It's all okay to have a losing position. It's all okay to have some losers. But most importantly, the most difficult thing when it comes to trading binary options is how to trade the trending market. Finally, I got this fixed, and now I'm doing well with it. When I get a downtrend trending market, I will use the Martingale methodology on money management to recover back all the losses and make profits and make bank. This is the most important thing. Now we go back to I think I have cleared everything here, and I hope that you get the point. It's really hard to me to speak and explain all of these things because I never taught these things to anyone, and it's the first time. I hope that you get my language in the first place, and I hope that you understand my accent, and also I hope that you get the point and you get what I want to deliver here. So you really want to excuse me for not being a good teacher. It's not one of the things that I do like to do, but I have to. We go back to the picture. Let me just find it. To this example here. So just like I said, in a downtrend or an uptrend trending market, I want to wait. If I get fakey arrows here, if I get arrows with in the middle of a trend, if I get arrows and valid breakout theory and they lose, I will wait. I will keep doubling up my investments, doubling up until I get to the reversal point where it will give me another arrow and a valid breakout theory, and at the end I write that correction trend and I make profits and they cover back all the losses and they win at the end. And for a ranging market, I want to use the support and the resistance lines, also the double tops, double bottoms, triple tops and triple bottoms, to see if the price is reaching a exhaustive area for price reversal. And when it does, and I have another popping up arrow, a signal, and I check if there is a valid breakout theory, I will take the trade, and most of the time, 90% of the time, it will be a winner. Sometimes it will lose, and it's all okay to have a 10% losing positions. And most of the time, 90%, gaining all my trades. So I think that's all for how to identify the markets, the three types of the markets, and how to use them, how to trigger them, with basic and clear explanation here, and also how to use the system along with those three types of the markets, and how to trade, and also the money management that I do use with those three types of markets. I hope that would be a complete course and a complete valued information here for you. But if, as I mentioned earlier in this course here, in this bonus course, I will be leading and holding live training sessions, and this is the first thing I want to start with in the rooms. I don't want to start live trading, and so I will all of you will get this almost the same level of training and education and experience, so that you during the live sessions I won't be needing to train you and give you signals in the same time. I want to train you first, and then we proceed to getting the live trading sessions all together, and that way you will understand better most of the terms and the words we use here in the trading. So as I said, in the live training session, sorry, I'll be doing more training, and I will be answering all of your questions and concerns. So thanks for watching, and make sure to watch the next few bonuses, the best 5 chart patterns that profits in binary options, and also the Fibonacci trading secrets. Those are 3 important courses that I want you all to go through, so you will get the best points at looking at the market and understand the way it moves and the nature. So I hope I didn't take much of your time. So thanks for watching, and see you in the next videos.